Hey guys, this is Late Night with Max and Jax. Thanks for tuning in. I believe this is episode 7. All right, so let's talk markets today. I got just a few things I want to talk about, and then we'll look at the futures, and we can look at the spreadsheets, and we can talk about some stuff. All right, so oh yes, the first thing I want to talk about, the first number one thing on my list is this website. This website is a great source for all things covered call funds. Um, One of my friends in one of the discords I'm on is doing this, and it's an awesome thing. He's a website designer, and he's done a great job in this. Um, all right, so Jackson, what are you doing? Behave, Jackson. He always looks to start getting in trouble as soon as I get on the soon as I get on the soon as I get on the live stream. All right, so the website is covered call, quick links, etc. .godaddyscites.com. So anyway, let's look at this. I'm on Retire on Dividends page. He has everything here. This is an amazing. His name's Oxymoron in the thing. He doesn't have a YouTube channel. I didn't know if you wanted me saying his name or his handle. Anyway, he's a great resource. I think he's on several discords, and this guy's awesome. All right, so let's just go through and see what all stuff he has. I really haven't checked it out lately. I checked it out about a month ago, and I liked it. He said he was going to make a special dedicated section on his page for me. So let's see what he's got. So we got a ticker, and then we have all the ETF companies. Yield Max, Crane Shares, Defiance, Yield Max. All right. So then we can go to Yahoo Finance from here, Google Finance, Finviz. Boy, I love Finviz. I don't go there often enough. Stock analysis is good as well. All right. And yeah, he has these dedicated pages for these other YouTubers. I mean, these are all my friends, granted. Retire on Dividends and Casey Mafia. That Casey Mafia, his name's Mike, and he's a good friend of mine from Discord. He's Mike, the tactical stock scalper, and I always reference his videos. I think everyone knows who Retire on Dividends is. He's big time. Let's see what Oxymoron's dedicated page is. I don't think he has a YouTube channel. If he does, I'm going to be embarrassed. Boy, this is awesome. This took a lot of work. I told him today, how much do you want for this? And, or I said, how much are you should get paid for this. Making websites is a pain and stuff, and he just likes to do it. My speakers are blowing on my MacBook, so I'm going to turn the volume down. Or they aren't really blowing, but they're just making a staticky sound, and they didn't used to do that. I've had another MacBook that did that, and I think I had to reset the PRIN or something like that. There was something I had to do, and it fixed the problem. Anyway, this just started doing it about 2 weeks ago, but as long as I put on headphones, it doesn't do it. So anyway, he's got some nice entertainment in here, a little 21 Pilot song. This is really cool. Let's see what else he has. So that's his dedicated page. So Retire on Dividends dedicated page. Let's see what it has. Direct link blocked. All right. Oh yeah. Okay. So I use this every day. These, of course, I talk about these on my live stream all the time. We're going to talk about those a little bit later also. All right. So let's go. Let's see what else he has here. Let's go and see what he did. Boy, he even has Retire on Dividends polls. Did you guys see Retire on Dividend did a poll today? You have to vote for it on YouTube, but let's go ahead and vote right now. He was saying, so he said, all subscribers or watchers, please vote as this could affect future videos. This poll is in relation if I should continue to cover the Defiance funds daily or if I should spend time covering the Yield Max funds, Curve, maybe other high income ETFs. Just from a selfish standpoint, I wouldn't mind being the only one that did the Defiance funds, but the problem is I use his page a lot to make sure I have my numbers right. So I don't know if I could do it by myself. I'm just going to say Cover Defiance Weekly. Yeah, I'm just going to say the happy medium because that guy's a busy guy. Retire on dividends. His kids are in sports, and springtime's coming up, and summertime. It's going to be crazy for him. All right. Well, anyway, that's pretty cool. It even takes you to his polls. It takes you to the rest of his YouTube feed. Yeah, this is an awesome source. All right, let's go see what he did on. Let's go see what he did on my page. Max Convexity. He asked if he could put my merchandise up, and I told him don't bother, but he did. It's still up. I'm just not pushing it anymore. Or maybe it's not up. I didn't really want him to because I'm not really pushing it. I'm going to bring merchandise back next Christmas. I don't think my channel's big enough to have merchandise yet. So then he has Max Convexity's YouTube channel. Yeah, okay. Boy, this is really awesome. You got to see I hit 1,500. I didn't see that until just now. My growth was slowing quite a bit because it can only grow fast for so long. I almost got to one day where I had negative growth. Let's see how I'm doing. 1502. Yeah, this day right here, that day I only gained 2 subscribers, which is the lowest it's been in a while. But then I made a new video and I gained like 30 subscribers that day and 10 that day and a few this day. Anyway, all right, well, who cares? That stuff really doesn't matter all that much, but I do appreciate each and every one of my subscribers. Anyway, this is a great page. I'm going to link it in my description, and I want everyone to go click on it and use it. Let's see, I just got a new email. Let's see who this is from, or a new comment. No, it's not a comment. All right, well, this is nice. It even has a couple of my videos linked. Okay, well, let's see what else is on this really quick. Prices, dedicated pages, useful things, crypto, forex, underlying stats. Oh my gosh. What a great source this is. Yeah, I want everyone to go click on this, and it even has the financials and everything. This takes a lot of work. All right, let's see what else is going on. I usually go and take a few questions from my questions. I like this commenter. He has a good attitude. It sucks the funds down, but he mentioned pretty sure we get paid tomorrow from Defiance, so having cheaper prices to drip into is good. That is one way to look at it for sure. Okay, this is a question I wanted to address. And I get this question all the time. It says, could they/we buy protective puts? And I said, no, they aren't going to do that. That's not part of their business plan. They won't do that. I mean, by listening to Jay's interviews, as many interviews as I listen to, that's just not, they aren't trying to time the market. When would they buy them? How do they know when it's going down? I mean, it's not always obvious. Wonder if they buy puts and then it starts going up again the next day. Then they cost themselves yield and then they can't pay as high of a dividend. That's not what they're doing. But could we buy protective puts? Absolutely. Absolutely. And I was going to look into that, and let's just address that right now. And I'll show you the way I would suggest doing it. There's a jillion ways to do it, and there's already a million videos out there on the internet, but I haven't seen one that suggested this way to do it. But let's see what I would do. I would just build a short synthetic future in whatever I was trying to protect. Let's say I had a Tesla position. All right. So, first of all, let's talk about what a short synthetic future is. I think we all know what long synthetics are because Tesla uses them to simulate the stock position. It's where you buy a call and sell a put. In Tesla, that's what Tesla does, or that's what Tesla does in Tesla. They buy a long synthetic future and then they sell a put. They sell a call for income. All right. So, and that synthetic's really cool because they don't have to own the stock. It's more efficient than, well, it's not really more efficient than having owned the stock. It's just different than having owned the stock. They don't use margins, so it actually costs exactly the same as owning the stock. But there's other good reasons to do it too. It's just these guys are option traders and they like to trade options. All right. But what you could do is you could do a short synthetic. And what I would do is I would go out as far as the options will take you to August. All right. And a short synthetic is where you buy a put and you sell a call. Now, first problem is these aren't super liquid. Oh, this isn't too bad. It's bid at 350, asked at 370. So we'd assume we pay the 370. And then we're going to be able to sell at the bid, hopefully. Bid at 25 cents to ask at 30 cents. See, that's the problem. The market makers know that these things pay huge dividends. And they know that the dividend comes out of the NAV. And so the market maker knows just as well as we do how much that this should decay. You know, they do this for a living and they build it into the price. If this was a normal stock, like let's say if this was Apple. Okay, if this was Apple, you could do a synthetic. You could buy the put for $12.95, and you could sell the call, or I'm sorry, you buy the put for $12.95, sell the call for $13.90. So roughly the same price. You know, pretty darn close to each other. But because Apple has about as much chance of going up as going down, Apple, they don't pay a freaking 50% per year dividend out of their NAV. That's what makes it decay sometimes. That's what makes these yield ones decay. So anyway, let's go back to Tesla. So Tesla, the market makers know this, and you can sell the call, but they aren't going to give you that much for it. So the definition of a synthetic is a short synthetic is a long put and short call at the same strike price, but you don't have to do at the money. So you can go in the money and you can get a better price. Watch this. If we do this at an 11, it cost us $2.75 to buy the put, so it's a little cheaper, and we can get more for the call because it's in the money, and we can get 55 or 65 cents for the call. So that's a little bit better. That's a little bit better deal. We can even go down to use the 10 strike price. And this is even still a better deal. We can sell this one for $2, and we can buy the put for $2 and sell the call for $1. We can even try a 9. All right, at a 9, it's probably the best deal. Buy the put for $1.35, sell the call for $2.05. So we can do this at a credit. We'll actually bring in money if we do this. The bad side is the bad thing is, or it's not the bad thing. This is a way to hedge, and you know absolutely what the stock's going to be worth on August 16th. On expiration day, the stock is going to be worth 9 if you did a short synthetic with the 9 strike. It's going to be worth 9, but plus you have to factor in your credit. You're getting a credit of $70, so that makes your break even $9.70. All right, let's look at the break even on the different strike prices. Let's look at the break even at 10. Your break even's 9, so that's not as good. You want the break even to be higher. The break even's $8.80 on this one. So I just go when I'm looking to hedge, and $8.55 on this. The 9s are the best. Let's even try the 8s. Let's see if the 8 would give us a better way to hedge. I hate to sell it for 8, and that's what you're doing when you do this, but you aren't really selling it for 8. You're actually selling it for $10.25 if you do it like this. You know, you're actually going to have to sell it for 8, but you got $225 in your pocket right now, so your net effective price is $10.25. I would probably use the 9s. I think 9s are a happy medium. All right, so here's what you need to figure out. So we have till August. So you can figure out how many paydays there are till August. Let's see, there's January, February, March, April, May, June, July, August. And I don't know when Tesla pays. They pay after that. So actually there's January, February, March, April, May, June, July. There's 7 paydays. So you have to figure out what Tesla's been paying. And, you know, this is where the guesswork comes in, but I don't even know it. I don't really look at Tesla that much. Let's say it's been paying, or I guess let's just look up at, let's look at Tesla's dividend history. Okay, here's some dividend history. Okay. All right, so here they pay 60, 58, 58, 58, 83, a buck, 80, 44, 83, and 90. Okay, let's say they pay 60. Well, let's just guess. Lately, they've been paying more like 50 or 60. Let's use 55 cents for a let's use 55 cents for a guesstimate. So let's see here. All right, let's just do a little figuring here. Equals 7 times 0.55. Okay, so we can get $3.85 estimated between now and the time that option is up. All right, so that's one side of the equation. The other side of the equation is we're going to have to sell it at 9, but we also get 70 cents. We're going to sell it at, say, 9.70. So you add 9.70 plus 3.85. All right, so all right, so you have a net effective price of $13.55. So let's just say you didn't own Tesla yet and you wanted to buy it today. Let's say you didn't own it, but you could buy it today and simultaneously put on this short synthetic. And here's what you would know. You would know that at the end of the deal, it's going to be worth $13.55, and that includes dividends, and that's guaranteed. Because you bought the call and sold the put. You've locked out any downside. You've also locked out any upside. You basically turn this into a bond. You know what it's going to pay. So now let's see what Tesla closed at today. So it closed at 11.54. Let's say you did this on the close. All right. So let's see, 11.54 is what you had to pay for it. You're going to get 13.55 out of it. So that equals, let's see, this divided by this. That's not right. Let's see. Let's do this. Let's do this minus this equals. So you're going to make $2.01 guaranteed, locked in. This is like it's an arbitrage play. And then you're going to divide by 11.54 to figure out your percentage. Okay, so you could buy Tesla today with no risk and lock in a 17% return. And that's a 17% return between now and August. That's 7 months. I could annualize that, but just to make it easy, let's just double that. That's about a 34% annual return. And I think it's a little bit less because it's 7 months. So call it 30% annual return, just guesstimated. That's not bad. You can basically turn these high yield funds into bonds for the next 6 months. You know, it's like a 6-month T-bill, except it pays 17%. That's the way I would do it because I like certainty. I don't, there's other ways to do it. You could just buy the put, and that way if Tesla goes up, you wouldn't lock out your upside. When you're selling the call, you're locking out your upside, but selling the call helps finance the put. And it also gives you an exact price that you know you're going to sell it for. You're in for $11.54, and you're going to be out for $13.55, including dividends and including the credits you got on your from putting the synthetic on. If anyone has any questions about this, hit me up in the comments. But this is the way I would do it. I don't like risk. This is one way to do it. You could buy this stock, buy Tesla, then the second you bought it, you could put on the short synthetic, and then boom, you've locked in a profit. So that's not bad. 70% isn't bad. Here's the caveats to this. Wonder if Tesla's dividends go down. Wonder if you misestimated. Or like George Bush said, you misunderestimated, which isn't even a word. Wonder if they only paid 40 cents over the next 6 months. That's $2.40. Let's see. So the math would change a little bit, and you wouldn't make as much. So this is based on estimates. There's nothing guaranteed, but this is the way I would do it. So yeah, you can buy protective puts. And if you're one of these guys you're just sure that these things decay and you're just sure this is going to zero or whatever, you can still get in on these funds. Just put on a short synthetic as soon as you buy the thing. And then for the next 6 months, you're locked in. Now, at the end of 6 months, when these expire, you can either just let it go, or you can cover it and roll it out to another one, and do another synthetic for the next 6 months. But I just like certainty, and that's the way I would do it. But there's a jillion other ways to do it. You guys probably have better ways to do it yourself. One thing I would not do, and I heard Jay say this too, don't get smart and buy a put in Tesla thinking that'll protect you. Because there's times when Tesla goes up and Tesla still goes down. And so the put, you're going to lose on both sides or whatever. Don't do that. And I heard Jay say that on his interview with the coach. But yeah, putting a synthetic on on Tesla itself, heck yeah. It's very possible and very profitable, or semi-profitable. I might for tomorrow night's show do an estimate on all of these for the next 6 months, on all the yield funds. And I'll come back tomorrow and we'll see which ones have the most attractive numbers. All right, let's go on to something else. I've talked enough about synthetics. I could talk about synthetics all day long. Synthetics and option trades are my favorite thing to talk about. And that takes me to another point. Here's a guy that I met on my live stream last night, or it's not really a live stream, but I was taking questions while I was streaming live, I guess. And this is Charles. If it's the same Charles, I bet it is. I'm pretty sure. The guy from last night was from upstate New York somewhere, and I think this sounds like him. Anyway, but he said, want to go broke fast and invest as many of these monthly payout ETFs as possible. I only like SVOL and FEPI because at least their structure allows a grind up in share price when the market goes bullish. And Charles, he's another guy that really likes option strategies. He gave me an option strategy last night, another type of arbitrage play where you could do a risk-free play. And so this guy knows his stuff, and I really enjoy talking to him. I would add that, yes, the structure of, I don't know about the structure of SVOL, but for sure the structure of FEPI and the structure of JEPQ does allow those funds to appreciate slightly more in an upwards market. No doubt. And it's because they use monthly options instead of daily options or weekly options. That's, monthly options are less efficient at gathering yield, but they're more efficient at, they're less efficient at gathering yield, but they're more efficient in giving you upside. They don't cap your upside as much. They're less efficient at capturing yield. That also makes them less efficient at capping upside. So yes, I would agree with him. If you know the market's going to be bullish, you're better off in a JPEQ or JEPQ or JEPI or something, and not one of the daily ones. But it's just like everything in investing, there's a trade-off. The daily ones give you a lot more downside protection. And let's say today was a good example, as a matter of fact. Let's check this out. All right, let's check this little thing out. Okay, so over here, I have, this is the SPX. That's the closing price, and that's the percent change over here in column C. So SPX is the underline for all three of these yield funds, right? Okay. SPX, the underline was down 0.8. Okay. That's not a great day. It wasn't as bad as the Russell did. Okay. Well, JEPY was down 0.45 because they use daily options. They're going to give you more insulation on the downside. Lots more insulation. They were only down a little more than half as much. I mean, so yeah, you get less upside, but you get more protection on the downside. It's a trade-off. I'm not saying one's right and one's wrong. I mean, it's just there. You just have to be aware. So here's FEPI that uses monthly options. It's a great fund. I'm not throwing shade at it, but look how much it lost today. It lost almost as much as the index. The monthly options, yeah, they don't cap your upside, but they also are not very efficient at gathering yield. If you're trying to gather yield and protect your downside, the daily options are better. And here's JEPI, the JP Morgan fund, and that one was down 56 basis points today. Still, the difference between JEPY, which is daily, and JEPI, which is monthly, is 11 basis points. But 11 basis points on this kind of move, that's a 25% difference. That's huge. That's I always give the example of look back at COVID and the market was down 40% and the covered call funds were only down 30%. And if they would have been dailies, there weren't any dailies out at the time, but had there been daily funds out, they would have only been down about 25%. The dailies are awesome for protecting up from the downside. So no, I would take issue with, and I agreed with everything else Charles and I talked about last night, and he gave me some great ideas on option trades. But no, buying these funds is not going to make you go broke fast. Or, I mean, any faster than buying, any covered call fund is subject to decay. And if you're worried about downside decay, the JEPIs of the world and the FEPIs are going to decay more. Just mathematically, they will on the downside decay. But on the upside, if you knew a bull market was coming, sure, heck yes, JEPY and FEPI would give you a little bit more upside. There's a trade-off with everything. There's no free lunch on Wall Street. All right, so that's my speech on daily options. I'm sure people are getting sick of hearing about it, but I just get very enthused about daily options. I think there's a misnomer that zero DTEs are more risky, and they aren't. Or let's say this, they are more risky for people that are buying them, but we're selling them. That's the thing. We are selling these. When you own these funds, we're selling the risky options to the people that YOLO. We're monetizing the YOLO crowd. So, it's just the opposite is true. They're less risky if you're worried about downside. All right, so what else do we? Okay, let's look at stock index futures. All right, so Russell just got murdered today. This big bar right here was the closing bar. It closed pretty much on the lows, but it closed around 76 and it's at 82, so it's up 4 handles from where it closed. If you look how far it dropped, that's just a drop in the bucket and nothing to get excited about tonight. I'm not trying to rain on anyone's parade, but I would like to see it be up a lot more than this before I'm going to be excited. Okay, NASDAQ is just barely up at all. It's up 13 handles or, 8 basis points. I mean, it's going the right direction. The markets were also up last night. Look, last night's market closed here, and then they went up to here, and then then they came in and started selling them again. So who knows? Here's S&P. S&P's up 7 or 8/100ths of a point. All right, let's get on to some business here. I've done enough rambling. I'm going to open a Coke or a Pepsi. What is this? Diet Pepsi. All right. Let's talk about the sheets. I haven't done the sheets yet, but I'm going to do them live on air, and then I'm going to let you guys go. So if you guys don't want to watch this, it'd be fine if you signed off. And for those who have been listening, thank you so much for listening. I appreciate each and every one of you guys. I'm going to post this live just as soon as I'm done. As soon as I'm done, and then hopefully I'll take questions from you while we're listening to the show together. So anyway, for the people that are still here, I streamlined this a little bit where it's not quite as hard. First thing I have to do is put the date in. Then the second thing I have to do is I still have to change this thing from a formula to just the number. All right, that's the closing price. Okay, so now it'll stay there. So then the next thing we do is we go over here to the old Defiance website. The Defiance website is doing a little something different. They aren't giving us the trades individually in the intraday trades. I'm going to check one more time with you guys watching just to prove it to you. Yeah, those are still the old trades. So I guess they aren't doing, I don't know what their program is, but they're consolidating them. So here's what we got. We have they sold a 47.15, 221 times for 1570. So I go up here, I write 221, and I write 1570 right here. That's the price they got. I forgot already what I said they were. 47.10, I think. 47.10. I'll check that in a second. All right. All right. So now all I got. Well, I'm saying no, and then I still have to go get the shares and the fund size, and then I can just copy everything over. So it's a little bit quicker than it used to be. If you guys watched me before, where's Defiance? All right. So the shares outstanding are 585 and 10479. Okay, 585, 10479. They're the same as yesterday, so I can basically just drag these numbers down, copy them down. Okay, then from here I can just go straight across. Oh, sorry about that. I don't know why it does that. All right. Oh, darn it. All right, so right now something's wrong. Yeah, this one equals this one. Okay, there we go. So we sold 221 4710 options for 1570. I'm glad to see they got more than 10 bucks. They only received 10 bucks for yesterday's options, which isn't a lot of money, especially when we had to pay $40.19 to buy the damn things back. Anyway, today, because of the elevated vol, like I say, the dailies are better at capturing yield, and that this is how they do it because they reset every day. If FEPI or JEPQ or one of those monthly ones, they're already locked in. They only do their transactions every month. Or even the weekly ones aren't as good at capturing yield, and thus and buffering downside. So anyway, yeah, that's a prime example. That's a 50% bump, other things being equal, which they probably aren't, but a 50% bump in volatility just overnight due to the sell-off. All right, so then we're going to go over here and see how much we're going for. We should be going for about 300,000, yeah, because of the 50% bump. You can just take yesterday's 200,000, add 50% to it, and sure enough, 300,000. So hopefully we'll actually get it tomorrow. Hopefully we won't have to buy these back. Then we can also drag this down. We're going for 33 basis points, which is the highest. You know, we made 22, then we made 11. Then I don't know what these were because they changed because we lost money. But this is probably the highest capture we've had so far this month because volatility is elevated. Let's do our running total. So if we can go ahead and win tomorrow, we'll get our running total to only down 300,000 or start digging ourselves out of this hole. All right. So anyway, so there's that one. So now let's do QQQY. I'll try to do this one faster instead of explaining it so much. I think you guys got the picture. First thing I'm going to do is shares outstanding and net assets, 271.12 and 15.6. So 271.12 and 15.6. It's almost like they didn't update these because there's no way I think both of them are the same. Anyway, I'm just going to go with the numbers I'm given right now. All right, and then I have to go do this thing where I switch the close and the current price from a formula to a number. 16,368.49. Okay, so then all I have to do is put in the new date. And then all I have to do is go get the prices off the Defiance website and drag everything down. Where's that damn thing? Okay. Let's go get the prices. I'm going to check the intraday trades on this one too, just to make sure they didn't put them up. I just don't know why they can't. I don't know why they changed their method. All right, so here's what we have. We have for tomorrow's expiration, the strike is 16,410, and we sold it 164 times for 76 bucks, 176.40. All right, so check this out. This one we're also getting a higher price because the yield went up. And I think I said 16,410 was the strike price. Let's check that real quick. Yeah, okay. So now all I have to do is drag this down. Intrinsic, extrinsic. And then all I'm going to do is I'm going to drag this and this down. I'll just drag this down. All right. So let's talk about this real quick. We sold 164 at the 16,410 level. We got $76. So the break even would be 76 less 60 or 16,410 less 76.40, which would be this number 1633.60. I won't make you watch me draw profit boxes. It's too boring, but the profit boxes will be on the charts by the time we get to the morning. All right, so these guys are going for 1.2 million, and that equates to a capture percentage, if they get it, of 0. So I don't think 0 is right. I don't know what's going on with the 0. Maybe. All right, capture percentage is 46 basis points. So that's getting up there again. You know, they were just capturing 0.30 and 0.13. That's nothing. The volatility is getting thin when markets go straight up. Straight up is what hurts these funds, not the straight down. Straight down is not fun, but it actually helps the funds out in a weird way. All right, especially the daily ones. You don't want straight down if you have a JP Morgan or a FEPI for sure, but on these right here, the daily ones, because you're monetizing that juicy premium, you're fine. All right, let's do IWMY really fast, and then I'm going to let you guys go and get back to your evening. All right, so IWMY. Boy, this one really had a rough day today. So its assets were 525 and 103.3. Yeah, I just don't know. I've never had a day where all the assets and fund size and share stays the same. I'm thinking they didn't update this site. I just can't believe no one bought, or really I can't believe no one sold. You know, because people panic and you know and sell. All right, well that's fine. We'll just go with that. Then all I have to do is put in the option prices. Just because I'm going to do it one more time, I'm going to check these intraday trades and make sure they haven't updated here yet. Nope. All right, so here's where we have the strike is 1975, and they sold it 525 times for 24.70. Boy, they got a lot of premium. Holy cow! They just got $9 last night for whatever options they sold, and they got 24 tonight. Now, sure, the in the money amount may be different and stuff. You can't always compare by looking at the numbers, but generally, you want the price you sell it for to be higher. 9's really pretty thin. Look, we sold one for 10 the first day of the month, then 13, then 19, then 14, then 16, then 9, now 24. So it'd be the highest price we've got all month for the option we sold. Hopefully, we'll have a winning day tomorrow. Even if we don't have a winning day tomorrow, we still got these $24. This still protects us from the first $24 of downside. This is ours to keep. This money, you know, Jay even mentioned this too. When you sell an option, you earn the money. Yeah, sometimes you have to buy the option back for more. You have a trading loss. But that $24, you know, somebody that just buys the stock, you could sell a put. And it's the same thing over a short time frame, and it's very similar to just buying the stock. So you go out and buy the stock, and then I go out and sell this put, and then we see who's ahead tomorrow. Well, let's say by tomorrow the market craters again. It goes down 1%. Well, let's say it goes down 100. Let's say it goes down 50 points. Let's just say it goes down 50 points. Okay, well, you bought the stock. You're down 50 points. Congratulations. Oh, I sold the option. So I'm only down 26.3 points because I got this 20. I've earned this. As soon as you sell the option, you earn the points. Even though I have to cover it back for more, this is still protecting you on the downside. You aren't losing as much as somebody that didn't sell the option. You always compare it to what would happen if somebody just had the stock. So that's a thing that is kind of hard to understand, and it's hard to wrap your brain around. And I've always thought that. I've always known this. But Jay mentioned it in the interview with the coach, That, you know, when you sell an option, that is money that you earn. All right. So let's look. What else do we need to do here? Okay. So all we need to do is get the strike price, drag the prices, and then I'll let you guys go. Strike price is 1975. All right. All right, so then all we have to do is go like, oh shoot, I do have to do this. Okay, now I'm trying to let you guys go. Hopefully anyone who wasn't interested in this already tuned out, and that's fine. That is fine with me. All right, so we'll just do it like that. We got to go over here. All right, let's talk about this, then I really will let you guys go this time. So for tomorrow, we sold the 1975 put 525 times, same amount of contracts as yesterday, except yesterday we only got $9. Today we got $24. It makes a big difference. We received 1.2 million. Yesterday we only received about half of that. Break even is 1950. That's a big distance. You know, that's a lot of downside protection there because of that huge premium. All right, intrinsic and extrinsic don't matter that much, in my opinion. I know they do at the end of the month, but it's fine. I'm keeping track of them, but they really don't matter as much as people think they do. And especially, it's not like they don't matter, but we don't have any idea what the intrinsic and extrinsic is. We're just using the closing price from the day before to determine the intrinsic and extrinsic. So that's only accurate if they sold right at 2:59 and 59 seconds. That's, you know, if they sell at 2:45 or 2:30, and they don't tell us when they sell, they just say kind of towards the end of the day. So the intrinsic and extrinsic is it's a big nothing burger as far as I'm concerned. Like I say, intrinsic and extrinsic itself is important. We don't know those numbers, so it's just a guess. All right, guys, I'm going to let you go. You guys have a great evening. Let's look at futures one more time. I mentioned it in another stream, but I went ahead and I sprung for live quotes. There used to be a D next to all these symbols, which means delayed, but now these are actual live quotes. So when the market's really moving and I come on here at night, it'll be fun to have live quotes. And during the day, it makes my updates more accurate and everything. You guys have a great day. And if I said something you disagree with, please leave it in the comments and we can debate it. Or hopefully you'll be on the live stream debating it with me. All right, guys, have a good one. Talk to you later.